Morning traders, Matthew Cook here to go through today's trade update on CBA. We're looking at a bear call spread here with the stock now pushing higher and being above $73. We're looking to take advantage of today's strength, getting some better premiums for that strategy as opposed to the last few days. Just running through the analysis, first of all, we've got the chart, which is over the last month or so been performing very, very strongly. So CBA has rallied up, unlike the other banks in its sector, have actually moved up and been reaching new 52-week highs in the last couple of weeks. Now this has primarily come down to one reason, being the fact that CBA has an ex-dividend date which is out of sync with the other major four banks. So the other major four banks have their dividend cycle as a May-November cycle, whereas CBA has itself on a February-August cycle, and so because of that it tends to outperform during those periods versus the other banks. We've now seen CBA go ex-dividend, so that's now come and gone, and the last couple of days has shown a fair bit of strength on the stock and bringing it up to close that initial gap. However, looking forward, not only do we expect that the financial sector as a whole is fairly full valued or priced at a bit of a premium, we now have the stock that's running up and starting to provide us with this opportunity to sell into strength. The reason why we're looking to sell into strength is due to the fact that we've got these divergent signals here that have formed. We'll just put them on the chart there, where we've had equal to slightly higher highs on the stock, but we've had lower highs on the momentum indicators, and this is a classic bearish divergent signal. Now that we've broken that shorter term upwards rising trend, we have a confirmation break of that divergent signal, which highlights to us that we should be looking at selling into strength right now. It really gives us an indication there's a low probability of CBA continuing to break up into new highs and continuing that trend. So rather than trying to trade this stock as needing CBA to fall significantly, we're setting it up as a credit spread that only requires the stock to be basically staying still or falling. Falling will help us take an earlier or quick profit, but if the stock stayed exactly where we are 1 month time from here, we'd still be generating a strong profit on the trade. In fact, our maximum profit occurs if CBA is below $73, which is only 10 cents lower than where the stock's trading at right now. So to set up this trade, we're selling the $73 calls for September. We are buying the $75 calls for September, establishing a $2 credit spread. We're only doing this if we can receive at least 80 cents credit, which means that the theoretical risk on the trade is around about $1.20 or a maximum $1.20 as long as we receive at least 80 cents. If we, for example, receive 85 cents, then we get 5 cents more in our credit and 5 cents less than our risk. So our risk will drop there to $1.15. It's more or less a one-for-one relationship when it comes to spreads. So selling the position for at least 80 cents credit will be a payment to our account. We will have a margin requirement on this trade, and ideally what we want to see is the stock falling away under 73. So we either don't have to buy this trade back at all, or if we are able to, we'll look to do an early profit target by buying that trade back for 5 cents or less. That will likely occur if we saw a more severe fall in the short term and saw CBA trading down around $70 or even $69 on a very short term move. But we fully expect that we may hold this trade for the next few weeks, expecting a little bit of softness or weakness from CBA moving forward. If you'd like to get in on this trade, you can do so by giving us a call on the desk, 0755 854 200, pushing 3 for the equities and options team, or you can trade it online using the Trade Me button, which is on the right hand side of your screen on this trade alert. Any questions, feel free to give us a call. Thanks a lot.